You've probably been told you need 20% down to buy a house. That number is why so many people give up before they even try. Here's the truth. Most first-time buyers don't put 20% down. Many put down nothing at all. Yes, $0. Let me show you exactly how that works and whether it could work for you. First, let's talk about VA loans. If you or your spouse served in the military, you may qualify for a loan backed by the Department of Veterans Affairs. No down payment, no monthly mortgage insurance, and often a lower interest rate than a conventional loan. This isn't a gimmick. It's one of the strongest loan programs in the country, and thousands of eligible buyers never even ask about it. Next, USDA loans. Don't let the name fool you. This isn't just for farms. USDA loans are designed for buyers purchasing in eligible suburban and rural areas, and a huge percentage of the country actually qualifies, even some areas just outside major cities. Zero down, competitive rates, built for buyers who assumed a home was years away. Now, here's where it gets interesting for everyone else. Down payment assistance programs. These exist in almost every state. Some are run by state housing agencies. Some are run by counties or cities. Some are offered directly through certain lenders. They can come as a grant you never pay back, a silent second loan with no monthly payment, or a low-interest loan that runs alongside your mortgage. Here's what nobody tells you. These programs are often reserved for buyers who don't even realize they qualify. You don't have to be low income in the way people assume. Many programs cover moderate income buyers, teachers, nurses, first responders, and first-time buyers in general. And the definition of first-time buyer usually just means you haven't owned a home in the last 3 years. So why haven't you heard about this? Because assistance programs aren't advertised the way big banks advertise their products. There's no national commercial, no billboard. You usually only hear about them from a loan officer who takes the time to actually look. Let's walk through what qualifying can look like. A lender pulls your income, your credit, and your target purchase price. Then they check which programs in your specific city and county you're eligible for. Some buyers stack 2 programs together, one for the down payment and one for closing costs. Some buyers combine an FHA loan, which only requires 3.5% down, with an assistance program that covers that entire amount, meaning they walk into closing having paid close to nothing out of pocket. This is not a loophole, it's not risky, it's not something that falls apart later. These are established programs, many of them decades old, funded specifically to get qualified buyers into homes. So if zero down is real, why do so many buyers still believe they need years to save up? Part of it is outdated advice. Part of it is assuming a rule that applied to their parents still applies today. And part of it is simply not knowing which programs exist in their area, because there are thousands of them across the country, and they change depending on where you live. Here's what actually disqualifies people. Not income, not lack of savings. It's not asking. It's assuming the 20% rule is universal and closing the door before checking. If you're renting right now and telling yourself you'll start saving next year, ask yourself this. What if the down payment was never actually the obstacle? What if the real barrier was simply not knowing what to ask for? That's the conversation worth having. Not next year, now. Because the buyers who move fastest aren't the ones with the biggest savings account. They're the ones who found out what they already qualified for.